So you had almost this 10-year period where interest rates generally went lower. Policy settings on the monetary front were incredibly loose, incredibly accommodative. QE informed a part of that policy setting as well. And even with all of that in place, the demand for credit just wasn't really that strong through the economy. And now in hindsight, we know that when the private sector has big holes to repair in its balance sheet, there's not a lot that you can do from an incentivization point of view to get them to start borrowing, to spend, and to invest again. And so they're kind of the similar things that I'm looking for in the Chinese economy. And the holes that we're talking about here are the holes that have been left in the wake of the property slump. And, slump is probably a mild word for what's been going on there. For generations, I think, at least 1.5 generations in China, households have been used to investing in a second or third property, seeing the price of that property go up several percentage points, maybe 10% a year. And then over the last few years, that whole model has just been thrown into chaos. And, properties that they may have bought at, close to the highs of the market are now in a hole. Then a lowering of mortgage rates by 10, 15, even 50 basis points, that's not going to be the thing that incentivizes the consumers in China to start igniting a new property cycle. And that's certainly not what the policymakers want to see.
Amy, you talk about the mainland property companies. Let's talk about the bonds as we're tracking here in Hong Kong. There's more than a handful that are in line for liquidation hearings in the Hong Kong courts here. Evergrande has been liquidated. I'm not sure how that's following through over on the mainland, whether or not the courts on the mainland are listening to what the folks here are asking them to do. But how is this going to unwind, or how is this going to resolve itself? I mean, this property, all the property companies in China and the offshore debt problems, this is something that we've been dealing with for a couple of years now.
Yeah, and you're going to be seeing it being dealt with for another few years. I think, I try to allude to the GFC, not because I think it's exactly the aftermath of that's playing out in China, but this is how long balance sheet recessions take to play through the system, right? And in some ways, I think, allowing these companies to go bankrupt, to liquidate, is starting to get the system ready for a new cycle again. But that new cycle won't look like the old stimulus-driven property cycles that we saw back in China. But what the liquidations do afford the market, in my opinion, is it allows assets that, in mark-to-market terms are very stressed. It allows those values to be realized, and then it allows a level of clearing such that the backlogs can be dealt with.